The gap between the best and worst P2P lending platforms is growing, and if you don't pay attention, it could cost you real money. In this video, we'll break down which platforms are performing, which ones are failing, and where your capital is at risk. As always, nothing in this video is intended to be investment advice. P2P lending is risky, and if you don't monitor the platforms you invest in, you might lose your money. No platform is going to tell you, hey, we are gambling with your money. Instead, they will be offering you the highest cashback bonuses, as that's the only thing they have left to raise funds. So it's really up to you to read in between the lines. You can use our newsfeed on P2P Empire to keep an eye on the latest events. So let's dive into the performance data for April. As you can see, Mintos, Estate Guru and Peabury managed the largest loan portfolios in the industry. Mintos managed to slightly increase its portfolio amount while simultaneously decreasing its funds in recovery, which include pending payments and loans from suspended lenders. Let's take a look at Estate Guru's current situation. The platform recently released a podcast where the management discussed their ongoing recovery efforts. Although some updates were shared, the lack of clear goals or timelines for this year made the announcement feel somewhat underwhelming. In Estonia, the company expects to reduce the defaulted loan portfolio by around 40 to 50% by this autumn. That's the only country where a specific target was mentioned. For Latvia, there was no recovery goal shared. In Lithuania, Finland and Germany, the team expects higher recovery activity this year, but without giving any numbers. Estate Group pointed out that in Germany and Finland, they are facing an oversupply of collateral. This means that there are too many properties on the market, and as a result, buyers are only interested if they can get a large discount. In Germany alone, 15 properties are currently being prepared for sale. 5 of them are already in the final selling stage, with results expected in the coming months. However, the management also mentioned that recoveries from some difficult borrowers may take until 2026 or 2027. In Germany, investors should also be prepared for some capital losses. Overall, there was not much new information shared. We got a few details for individual markets, but the platform did not provide a clear overall recovery goal for 2025. While the tone of the update was cautiously optimistic, we should stay realistic. Some loans that are currently delayed could still default, which would further increase the share of non-performing loans. Just last year, Estate Guru defaulted more loans than it managed to recover. Whether this trend continues in 2025 remains to be seen, but so far the default rate in active markets is still going up month by month. Now let's take a look at Peabury, the third largest P2P lending platform in Europe, currently managing over 116 million of investors' funds. The platform continues to perform well. Recently, Peabury introduced a new loan originator, Prime Loans from South Africa. In addition, the company reported repayments from Lit Electra and Aventus Home, which shows ongoing progress in settling past loans. Even though interest rates dropped earlier this year, investor demand remains high, especially for short-term loans. This strong demand also means that some investors are still facing challenges in fully investing their available funds. Moving on to Robocash. This is one of the few platforms where investors continue to enjoy a 0% default rate. However, the outstanding portfolio has been shrinking for several months, and that trend continues into April. The portfolio size dropped by 2.2% in the last month alone, which signals lower loan availability. As a result, investors should not expect to deploy larger amounts of capital quickly on this platform. A great alternative to Robocash is Esketit, which increased its portfolio by nearly 8% in the past month. This indicates higher loan availability and less cashback for investors. Inrento is also doing great. The platform recently published its audited financial report, which you can review in our Inrento review on P2P Empire. The company continues to protect investors' interest while expanding its operations in Poland. Swapper also continued to share performance data. This increased transparency may be one of the reasons why the company grew by 23% last month. Finton is also showing steady growth. The company recently announced that the acquisition of the seed project in Costa Rica has been completed, and the project is now moving into the second development stage. Finton also shared updates on its Park Vista development and increased the yield on its mortgage-backed loan, Kolovrati, by offering an additional bonus for new investments. On top of that, the platform introduced new conditions for its early exit program. If you're interested in the details, you can find a full breakdown in our Finton review on P2P Empire. Indemo continues to expand its portfolio of discounted loans. The platform recently provided updates on the progress of several projects, including change in their repayment stages. To attract more investor capital, Indemo has also introduced new cashback bonuses. On LoanVest, we observed a slight decline in the outstanding portfolio. In contrast, Income Marketplace saw a 13% portfolio growth. The platform also added a new loan originator from Kosovo, further expanding its lender base. Aside from that, most existing loan originators continue to perform as expected. Currently, around €400,000 worth of loans are listed in the buyback initiated category. A positive update for potential investors on Debitum is that the platform has finally fixed its statistics page and added a disclaimer regarding the non-performing portfolio from Chain Finance in Ukraine. Moving on to Crowdpeer. The platform has made progress in loan recoveries, which helped reduce its default rate to 6.78%. In addition, Crowdpeer announced its expansion into the Romanian market and increased the number of available real estate loans in Lithuania. Capitalia also reported an increase in its outstanding portfolio last month. After noticing a rise in delayed loans, we contacted the company for clarification. According to the management, the delays are linked to 2 clients with a total of 7 loans, all of which are now in recovery. Most of the loans are backed by real estate and have reasonable loan-to-value ratios, but the recovery process is expected to take some time. Landa is also reporting an increase in the outstanding portfolio. The company offers good loan availability in loans from Romania and Latvia with yields of up to 11%. Additionally, Landa provides a 3% cashback bonus for new investors, which is a nice boost for those looking to invest in secured agricultural loans. Tvino reported a slight increase in its outstanding loan volume. However, the company has not provided any updates on recovering its loan book in Vietnam and the Philippines, leaving investors with limited visibility into those markets. Reinvest24 also shared a brief update regarding the renovation of one of its projects in Spain. As with several other projects, the platform continues to face difficulties selling the property, largely due to an ongoing legal issue involving its shareholder, Kherson. The market reported a 16% increase in its outstanding loan portfolio. However, the reliability of this figure remains unclear, as the platform has not disclosed how much investor capital is currently tied up in pending payments. Meanwhile, Afranga has relaunched its newly regulated platform. While the rollout is a step forward, some features were still missing at launch, so investors can expect further updates in the coming weeks. I also spoke with the CEO recently and emphasized the importance of publishing performance-related data, so hopefully we'll see more transparency on that front soon. As you can see, the outstanding portfolio amounts of many platforms are not clear or publicly available. This limits the information that the platform shares with its investors. Limited transparency can lead to higher risk levels, which is something you should consider when evaluating various platforms. Now, before we wrap up, let's take a step back. After going through all these platform updates, one thing becomes clear. Some P2P platforms are making steady progress, while others continue to struggle with transparency and loan recoveries. But at least in P2P lending, you can track what's going on. You see real numbers, real repayments, and real defaults. There is a risk, yes, but there is also visibility. Can we really say the same thing about the stock market right now? Because when we look at how public markets have behaved recently, it's hard to ignore the disconnect between price and value. Many companies are still trading at inflated valuations, and not because of strong fundamentals, but because of headlines, hype, and political drama. And here's where it gets even more worrying. In just the past few weeks, we have seen how a single person, Donald Trump, a convicted felon, can move entire markets with just a few words. That's not an exaggeration. One public statement triggered immediate shifts in stock prices, impacting millions of investors. No regulation stepped in, no accountability followed, just pure, unfiltered market influence. Now ask yourself, should one individual really have that kind of power over your financial future? Exploring alternatives like P2P lending with its relatively low correlation to traditional markets could help create a more balanced and resilient investment strategy. If you're curious about the potential returns from P2P lending, try out our P2P lending calculator. Just enter your investment amount, monthly contributions, and investment duration. The tool will estimate your expected returns based on the current average rates offered by top-performing platforms. So that's it from me today. If you found this video helpful, hit the like button and subscribe so you do not miss out on future updates. Thanks for watching, and I will catch you in the next video.